Hi everybody, welcome to another update on the stock screener. As you know, I used to calculate leverage by this definition. Okay, um, leverage can be calculated by looking at free cash flow, um, free cash flow 2 compared to free cash flow 1 at a different gold price, and then you compare it with the market cap. And that's the definition of leverage. And you add a multiple of 5 to that, could be another multiple, but this is one way to calculate leverage. However, it's not a complete definition of leverage because this only looks at the earnings and the market cap, right? It doesn't look at the mine life. It doesn't look at the growth. It doesn't look at the debt. It doesn't look at anything. It just looks at free cash flow and market cap. So this is not a complete leverage definition. So I want to go now to the real complete leverage definition now. And as you know, you can watch my video on Sung's valuation method for gold miners. And then you would understand what this chart means. This chart is using all metrics. It uses mine life, growth, production, taxes, interest payments, royalties, costs. It takes everything into account. Okay, and then it calculates the upside. For example, Soma Gold upside is 170% at a certain discount rate. And then if you change the gold price to, for example, 3,000 to 4,000, the upside goes to 500%. And this is calculated with the whole NPV flow chart. The NPV flow chart calculates all the cash flows that come in the coming years and compares this with the enterprise value, including market cap, debt, etc. Okay, so what is the leverage? How do I want to define leverage, the complete leverage? That's actually really easy. The leverage is basically the slope of this line. The higher the slope, then you have higher leverage. This one, for example, Majestic Gold has no leverage because the slope is very low. If the slope were horizontal, that means there's no leverage. So no leverage, slope goes up and your leverage goes up. So for example, if gold goes from 3,000 to 3,300, that's 10%. Okay, 10% up. And if the slope goes up 10% like this, so from 0 to 10%, then you have 1 times leverage because your gold goes up 10% and your upside goes up 10%. So that's 1 times leverage. Okay. If this goes up 20%, then that's 2 times leverage. Okay. And so on. So this one you would say looks like 6 times leverage to me. Okay, so because it goes from here to here, then that's 60%, so 6 times leverage. Okay, so that's how I want to define leverage for gold miners. So I've done that. I have included a new set of data here, which is called leverage. And you can see here, this minus this divided by this minus this. So that's the y-axis change divided by x-axis change, and that's the leverage. Okay, so you can see, for example, where is Soma Gold? That's 6.3 times leverage. Sarabi Gold, 3.4 times leverage. Let's look at this chart. This is Sarabi Gold. Yes, it looks like 3.4, so less leverage than Soma Gold, which has 6.8 times leverage. This one is Orvana Minerals, has even more leverage. Okay, so now I have added these numbers to this upside chart. So this is the leverage at 12.5% discount rate. And I think this is a more complete definition of leverage. Let's see what happens with 10%. Yeah, changes a bit. At 8%, you can see that the leverage is 7 times leverage now. So the leverage does change. Go to 5% discount rate. Then the leverage is almost 8. So it does change. Okay. With a lower discount rate, you get a higher leverage, and the leverage increases for the high mine life assets, of course. At the higher discount rate, you will get lower leverage. Okay, so you can choose your discount rate yourself. I choose 12.5% just to be sure. And then you can use this chart. It's very important. Now we're in a gold bull market that you choose the miner with the highest upside and the highest leverage. So choose one of these, upside percent highest, because those are the cheapest companies. For example, Step Gold is a very high leverage, 250% upside and leverage of 7.3. So one of the highest leverage and the highest upside. That's what you want to buy. Soma Gold also high upside and high leverage. Mako Mining, for example, also high upside but less leverage. This one, Maritime Resources, less leverage. It can change, of course, if they increase mine life, double the mine life, then probably this is going to have more leverage, but that depends on the fundamentals. Then we have, for example, Majestic Gold. You can see here there is upside, but less leverage. So I wouldn't choose this one because there's less leverage. If you're in the gold bull market, go for the ones with the highest leverage and the highest upside. Monument Mining, for example, has now less leverage, 80% only, and also 80% upside, and leverage is only 2.2. So I wouldn't choose this one for a gold bull market. B2 Gold is okay. It's a mid cap, so probably less leverage, but it's a larger market cap company. And Oceana Gold, the same. Then we have these ones have no upside and also no leverage. Look at this, the leverage is only 1.4, so very low leverage. Agnico Eagle, Almost Gold, is less than 1 leverage. Actually, these companies actually have less upside than the gold price because the leverage is below 1. Okay, so not good to buy these ones. Orvana Minerals looks like it's the best one with the highest upside and the highest leverage. But you need to understand this company a little bit better before you get into that. So understand all of these companies better before you look at this chart. Of course, this is just a chart to help you, and choose the miners that have the highest potential based on this chart here. So where would we put our money? Of course, in these ones that are already profitable, have high upsides. And from these ones, you choose ones that have the highest slope. Looks to me that this one, Soma Gold, is the best one. Step Gold also good, but they are still building that second mine. Havana Minerals looks good, but they are also still building and needs to get financed, all of that. Serabi Gold has lower risk, but lower upside, lower leverage. So need to Mineros about in the mid, not super good, not super bad on the leverage side. And these ones, of course, we avoid. So, yep, so interesting. I think this is a good way to define leverage by looking at the whole cycle, whole mining cycle, instead of just looking at the free cash flow and the market cap. Okay, so different definitions of leverage. I think this definition is more complete. And I'll see you next video.